In today's video, I'm going to be breaking down my favorite covered call ETFs that you can purchase today if you're Canadian, or even if you're American and you want to get some Canadian ETFs. These are fantastic, and this is why. Covered call ETFs pay a ridiculously high dividend, and if you're looking to have an income replacement or a supplement, then this is definitely something to look at. Let's get down, let's check these out really quickly. What is a covered call option? Basically, it's you have shares of whatever stock, let's say Apple as an example, and you want to make money more than what the dividend is paying. You would then sell a call option, which is a promise to purchase that stock at a future date at today's price, if it hits a higher price. If it never hits that higher price, you keep your shares and you keep the premium of what that call option cost the person who bought it. Basically, you're playing casino. And by the way, casino in the house always win. So the first one is BMO CA, which is Canada, High Dividend Covered Call ETF, ZWC. This one's MER is 0.72%, and I'm going to tell you right now, MERs on covered call ETFs are usually a bit higher, but nowhere close to what mutual fund fees are. The average volume is 220,000 shares traded per day, so it's very easy to get in and out of it by theory, and the yield is about 7% over the past year, which is fantastic. The only thing I do have beef with is, of course, when it comes to this ETF before, of course, the pandemic. Before that, the stock was doing not that great. It was slightly going down. However, it was on its way back up, and it's not really that old of an ETF, to be honest with you, so it's really hard to really judge. I always like to have on covered call ETFs at least like a 10-year 10-year period beforehand to see what it's doing. However, this is a Canadian high dividend covered call, which means that it's high dividend stocks, which they were kind of all traveling in that direction anyways. So it's not really too much to be worried about, especially after seeing, of course, what's happened recently since that big drop. Kind of shows me that this may actually be a very good ETF to be in into the future and get some high dividends with it. Now, the reason why you may see that it's got a little bit less than a 7% dividend is because it used to pay a 11-cent dividend, and then now it's a 10-cent dividend, which doesn't equal 7.2% now because it's 10 cents, not 11. However, who's to say it may not that it may return to 11 cents? It really comes down to the actual call option premiums that they are getting. Of course, they have their high dividend payments. Usually it's like banks and stuff in this ETF, which is generally around 4-ish, 5-ish% dividend. And the rest of that is coming from, of course, the call options. And the premiums, when the premiums go higher, when the market's more volatile, at that point, you will be making more of a dividend. However, when the market's kind of just stalling out, then at that point, guess what? The premiums go down, generally speaking, and when that happens, you're not going to be having as high of a dividend, but you're still going to be getting at least that 4-5-ish% from the stocks that it currently holds. Now, this ETF does hold some pretty crazy, amazing names, and that is, of course, Enbridge. I am a huge believer of that right now. Like 6-ish% dividend with it. And with Enbridge as well, they are investing in the future. They've got a few solar farms as well as other green technology, energy. And because of that, they still do obviously transport gases and of course stuff like that. But they are looking into the future. Royal Bank, CIBC, these are Canadian banks. These are massive, massive companies. And they're not going to be going anywhere anytime soon. The second ETF that is a covered call that I really, really like is TXF. It's the CI Tech Giants covered call ETF. This one is pretty strong of a dividend. 10% dividend is huge. And of course, the average volume is 61,000 shares traded every single day. So, of course, pretty easy to get in and out of it. Again, it's going to have a higher MER, so if you prefer ETFs that don't have a high MER, I would definitely look at something else other than covered calls. However, the covered call does make up for it, in my opinion, with the dividend, or the yield, I should say. We have to remember that, of course, the yield when it comes to covered calls are not generally, what I mean by that is some will be classified as dividends, and if they do pay it out the way they should, some part of that yield will be classified as a capital gains, which basically means that you'll be paying a little bit of a different type of tax on that than a regular dividend. Now, of course, if you look at the max list of the stock price, you're going to see that it's done extremely well. Over the past little while, of course, we have seen the tech stocks in general do extremely well. That's why you're seeing that. However, if we cut down to the last 5 years, we do see that there was a massive drop recently. Of course, this has wiped out a lot of people's gains over the past couple of months. However, we have to remember that this is in a sector that is currently having a little bit of a turnaround because it's a tech sector. This is a momentum, generally a momentum type of stock type, and because of that, that just happens occasionally. I always do like to look at year over year, and again, we're seeing that same thing happen with this ETF as we've seen with other covered call ETFs. Their yield is going down, mainly because the yield on, or the premiums on those call options are going down, and we have seen that quite often when it comes to these stocks as well. So keep in mind that this is still going to be an extremely high dividend, but don't expect these crazy 78-cent dividends unless there's more volatility happening very soon. Top 10 holdings are solid companies as it is anyways. There's AMD, Micron. These are big, gigantic companies. Qualcomm, of course, everyone will have a different opinion on that one. Nvidia is probably my favorite, and Apple and Texas Instruments, those are probably my 3 favorite stocks on this list. Next is the BMO Covered Call US Bank, ZWK. This one was actually fantastic for me because I got it way back when the market was basically plummeting to, or at least the billionaires were trying to make the market go to zero. But basically, I got this back when it was like an 11% dividend. It's no longer like that now, but this is still a very good ETF in my opinion, because I personally believe that the banks will outperform over the next little while, mainly because of what's happening with the market in the United States as well as in Canada. There's a big recovery that's happening right now, and even though interest rates are higher, or at least they're going to be going higher, that, in my opinion, makes the banks more money. And, of course, with interest rates going higher, that also means that there's going to be a little bit of a potential issue when it comes to mortgages and things like that. So keep that in mind too. MER is 0.71%, average volume of 31,000 shares, so it's not going to be as easy to get in and out of as the other ones, but I really doubt that many of the people watching these videos are going to be spending 20,000, 30,000 shares at $30 each. I doubt that. But 7.2% dividend is pretty darn strong in my opinion. 5-year chart, we can see that before the big drop that we were able to see that the stock or this ETF was improving, and then of course it's done extremely well since that big massive drop. Again, same thing is happening here, less premium, which means that there's going to be less of a yield, but it's not a massive drop. These are its biggest holdings. My personal favorite is Bank of America, especially right now, because generally speaking, over history, Bank of America has always done extremely well when interest rates are higher. ZWH is another very interesting one. It's very strong over its lifetime. This is a US high dividend covered call, kind of the opposite of ZWC. This one gives you a 6% dividend, 0.71% MER as well, 30,000 shares traded on average every single day. Something that you will find is this doesn't necessarily move all that much if we negate what's happened recently. So don't expect this to continue into the future. However, you're getting a 6% dividend with modest growth, especially if you're doing maybe a dividend reinvestment plan, or if you just keep on buying every time it dips down. That's kind of a good way of making massive money with this ETF. Unlike the other covered calls, this one also may have a dividend drop into the future. However, we haven't seen that yet, so I really doubt that may or may not happen. This is going to be some of the top high dividend, or at least dividend payers in the United States. Microsoft, Apple do not pay huge dividends, but they do pay a dividend. But these are all very solid companies, and I personally believe that Home Depot is kind of underrated right now. The reason why I say Home Depot is underrated, and I personally believe Lowe's is underrated as well, is because right now there is a massive housing shortage in the United States from what I've read. But there is a ridiculously massive issue in Canada where we just don't have houses. Like, I'm looking for a house out in farmland country so I can kind of build my business on my own property, and you can't find anything. 5 years ago, you could find properties out there for like $400,000, $500,000 for like 2 acres, 3 acres. And back then I was like, oh yeah, next year I'll be able to get it. And now those same properties are going for like $2 million. And back then there was like 200 properties for sale, and now there's like 30. So there is a massive housing shortage and property shortage on the market right now. So I believe that when there's more houses being purchased or able to be purchased, there's going to be more and more renovations that are going to be needed. And because of that, Home Depot and Lowe's are going to win because, of course, people will need to buy something to build something. And this last one is the hedged version of the CI Energy Giants covered call. This is a NXF is the ticker. This one has a 0.72% MER, so basically the same as the others. However, this one has an 8.34% dividend, 70,000 shares traded on average every single day. And the reason why I'm mentioning this one is this. Oil right now is going through the roof. There's not going to be any difference with it. Coming very soon, it's going to be continuing to go higher, mainly because our governments don't know how to handle anything. And because of that, oil is going to continue to go higher. So while our governments are not able to handle anything other than saying hello, we can then basically collect 8% dividends from an amazing ETF. Let me show you why. Recently, it's been going up because oil prices have been going up, which means that oil companies' stocks have been going up. Before then, Trump was in office, and of course, Trump was basically lowering oil costs by basically allowing anyone to mine anywhere. And because of this volatility that's happening, as well as, of course, the stocks going up, we are seeing that the dividend is actually pretty darn strong as well. And these are the companies that it holds, and I personally really do like CNQ myself. I used to own the stock, but I got rid of it, and there's a reason behind that. I just can't keep up with oil. It's just one of those things. I like the Canadian banks. I like tech stocks. That's my thing. I like dividends. I anything to do with dividends I love, but oil and mining and companies trying to figure out where else to mine and things like that just becomes too much of a headache. I don't want to deal with it, so I deal with pretty much any other dividend stock other than oil and REITs. However, I've been kind of starting to get into oil and REITs recently just because they seem to be pretty strong into the future. Anyways, that's my take. These are my stocks, or these ETFs that I personally like that are covered calls in Canada. I hope that this video has kind of helped you and maybe showed you a few different ETFs that you may not have seen before. And if it has, hit that like button, subscribe, let me know your comments down below, and I'll see you guys again next time.